Good morning or a good afternoon to everyone. Welcome to Risky Business 2023, the virtual event that explores the dynamic world of risk management in today's business landscape. I'm your host, Nick Vallis. I'm thrilled to be here with you today for a session packed with insights into navigating the ever-evolving terrain of risk within organizations. Our esteemed guest speaker today is Simon Bergeland from Diligent. Simon will be presenting the topic, Preparing for Future ESG Disclosure Requirements. Without further ado, please join me in giving a warm virtual welcome to our distinguished speaker, Mr. Simon Bergeland. Thank you, Simon, for being with us today, and I'll pass it over to you.
Thank you, Nick, and yes, good morning or good afternoon, depending on what part of the world you are sitting in. And thank you, Turnkey, for the opportunity to present on this topic of ESG. As you said, I will be talking to how to prepare for mandatory disclosures, and in particular, I'll articulate the 6 foundational components of a mature ESG practice. The important part of when you hear from somebody at an event like this is, well, who is this company and who is this bloke or who is this man? Essentially, Diligent, for those of you who do not know us intimately, is that we are a global organization that essentially exists to empower the leaders of the world to drive greater impact in their organizations. What drives us is an essential belief that we have the power to help transformational leaders build and scale more successful and, importantly, equitable and sustainable organizations. So everything we do is around the context of ensuring that leaders can drive their organizations with purpose for the benefit of both their organization and the societies in which they operate. What are you going to hear from me today? Today, you will essentially hear what is a summary presentation of a research white paper that the Diligent Institute, our not-for-profit research arm, and OKEG, another not-for-profit think tank, collaborated upon about how to prepare for mandatory disclosures. One thing to put your mind at ease is that you do not necessarily need to be frantically taking notes, because I'll ensure that you all get a copy of the white paper upon which this presentation is based, so you will have the full detail. So you can relax, sit back and listen to hopefully my dulcet Australian tones. All right, here we go. Preparing for future disclosure requirements. Stakeholders and shareholders continue to shine an increasingly bright spotlight on ESG issues. We know that. We're seeing that everywhere in the world. The ongoing global pandemic, questions around social justice, emerging geopolitical risks, these have all driven increased demand for organizations to be able to demonstrate responsible, ethical, and sustainable business strategies and, importantly, operations. As you know, the regulators are increasing their scrutiny as well. In particular, earlier this year in Malaysia, I think it was in April of this year, the Malaysian government announced that it will introduce a framework on ESG standards by the end of this year. And in fact, 3 days ago, the Deputy Investment, Trade and Industry Minister was on a panel, and he said that Malaysian organizations may soon experience difficulties in securing bank loans if they are unable to demonstrate an ESG practice. So whilst Malaysia in general is a little bit behind the rest of the world as far as ESG practice is concerned, the government is accelerating that initiative very much so, very focused. Their goal is to have a solid expectation in place by the end of this year. Of course, that exists within the context of global operations. So in the USA, the SEC has mandatory disclosures of the risks corporations face from climate change, as well as actions to manage these risks. In fact, they are so advanced that we're starting to see certain states pushing back and intimating that they may penalize some organizations for having ESG practices. So it's gone beyond the expectation of ESG to the point where some facets of US society are pushing back on it. So it's a very interesting dynamic in the US at the moment. The G7 nations have made their own push toward mandatory climate reporting, proposing requirements that follow the recommendations of the Task Force on Climate-Related Financial Disclosures. And the EU's high-level expert group has launched its sustainable finance disclosure regulations for the finance community. And its accompanying a concept of principal adverse impacts, which covers sustainability factors, both environmental and social. So, these measures that are emerging both within Malaysia and the rest of the world, they have big implications for boards, for executives, for legal and investor relations teams. Accessible and audible metrics are fast moving from the category of nice to have from a strategic point of view to must have from a finance and compliance point of view. So it is certainly a very fast moving environment that we must operate in. All right. So we always start with, where are we today? What's the starting point? And the question that we often ask and have discussions around at Diligent with our customers and prospective customers is, are organizations ready for the mandatory disclosure requirements? It's likely that the new regulations on ESG reporting will soon become a reality for you. The Malaysian government has stated that, as I've said. There's no reason to suspect that they're not going to push forward with that and make those expectations reality. Research, however, shows that a majority of firms are far from prepared for this shift. Right? In recent research by us and OKEG, more than half of the respondents said that they were minimally or not at all confident that their organization had mature and well-defined ESG practice capabilities. That's the majority, right? Now, disclosure regulations will require data as well as processes and technology that most organizations still don't have in place, right? And firms really cannot afford to wait on this obligation to install or to establish a practice, right? Because by then it'll be too late. You need to get going on this now, regardless of whether it's a local requirement or your organization has business in other countries where the requirements may be more stringent. You really do need to be establishing a very strong ESG practice now. And the only way to do that is to proactively lean in. And we will get to, in this presentation, some guidance on how to establish and accelerate an ESG practice. Okay, so if the majority are not confident that they have a mature practice, what's holding them back, right? Why is that the case? Seamless ESG compliance and reporting require getting the right information to the right people at the right time to make actionable decisions. Now, that's a bit of a cliched statement, but it applies to the ESG world as well, right? You need to have a process, but it's easier said than done in today's complex environment. The evolving array of standards and frameworks, some of which there may be multiple requirements to apply within an individual country, or indeed multiple requirements, framework standards across the countries that within which you do business. It's a constantly moving environment. So within each organization, what we have found is that there are numerous roles, departments, and systems responsible for ESG issue management, from governance, strategy, and risk departments to compliance, audit, operations, even to a certain extent, the more commercial departments like sales. I just came off a call myself for an event that we're planning to deliver in Manila, Singapore, and Manila, Singapore, and Sydney. And we were having a discussion around whether we would print out any of the assets that we wanted to ensure our customers and prospective customers got at that event. So all parts of the organization are affected by ESG talking points. And finally, and interestingly, most organizations lack the data and the tools to make ESG reporting simple. Right? And that includes applications that help you manage data, right? And map it against the chosen frameworks or the relevant frameworks and standards that you need to comply with. These factors combine to create a huge amount of organizational risk if you are not prepared with an ESG practice, based on the current accelerating trajectory of regulatory expectation around the world. So it really is an important topic into which to lean as a bare minimum from a compliance point of view, but also for you to successfully strategically compete with your competitors. How can you use your ESG practice to in fact do better business, do more business? Right. So what that essentially translates into is that we started to look at, okay, where are the fundamental gaps, and how do we help organizations, and how can Turnkey work with us to help organizations uncover these gaps? Of course, any ESG program needs to align with your overall operational organizational goals, objectives, and the way you do business. To identify how your organization can work towards these ends and how prepared you are for either current or upcoming disclosure requirements, there are 4 fundamental questions that you need to ask. And again, you'll get the white paper, so you don't need to worry about taking notes here. But essentially, the 4 main questions are: does your organization consider ESG metrics when making investments? Do you consider ESG metrics when choosing your suppliers? Do you align senior executive compensation with ESG metrics? That's a rapidly expanding requirement in certain parts of the world. And in fact, are you considering that also for general employee compensation? And finally, does your organization publish ESG metrics in the form of a sustainability report, an integrated business report, or some other reporting vehicle, so that you can be transparent around your ESG bona fides? Okay, so let's get into then the sort of the 6 main components of how to establish or your journey towards a mature ESG practice. Essentially, seamless compliance with current or future disclosure requirements starts with building a program that relies on quite a number of things: leadership, the right frameworks, data, the technology to handle that data, reporting tools, and of course, the ability to execute and track your executed actions. So let's have a look at each of these components separately. And remember, you are getting a copy of the white paper. So let's move on to leadership as the first component of a mature practice. First and foremost, what we have seen is that a successful ESG program has come from the top, right? It is at the board level, at the CXO level. There is a belief and an intent to use ESG to either strategically compete and or comply. This the chain reaction of how that spreads through the organization, it has to start with the board and the senior executives, and then it cascades to the rest of the organization. What we have seen, I try to steer away from absolutes, but absolute statements, but I cannot recall ever seeing what I would determine to be a mature and successful ESG practice when it has started in the middle. Because what ends up happening is that passionate executive or executives in the middle there, whilst doing the right thing and attempting to do so, without the buy-in from the senior executives and the board, it becomes very difficult to push it out to the rest of the organization, to keep it live, to keep it vibrant, and to keep it moving. So what does that mean? Organizations that are unsure of where to begin should simply start by making time for ESG discussions. Not to mention actually bringing the ESG lens to all current discussions around organizational strategy, risk, talent acquisition and management, and so on. Management teams must also understand how ESG strategies trickle down into the actual daily workings of the mid-level managers and below. And all colleagues need to feel some sense of ownership and understanding around the ESG goals of why we are doing this. What is the value to the business? What is the value to my department? What is the value to me as an executive and my contribution to the business in the way that I think, the way that I do my job? So leadership is critical. Then the second of the 3 foundational parameters, and then we will talk about the 3 additional parameters, but the second of the 3 foundational parameters, of course, is goals. Without a goal, without a clear understanding of where you're trying to go, you're going to meander, right? So every organization has to be super clear on what they're trying to achieve, Right? Your ESG goals, of course, need to ultimately serve the broader organizational purpose, which, of course, we know is becoming increasingly important to investors, and not only investors per se, but also, as I said before, around the statements of the Deputy Minister in Malaysia, not just investors, but also banks just making loans as opposed to strategic investments per se. So, your organization is going to have different ESG goals based on your priorities, as well as the unique circumstances of your industry, but the goals are critical. So in the end, you're going to have some goals imposed upon you, such as the Malaysian ESG framework that for manufacturers that will no doubt, in my opinion, be extended to apply to other industries. But regardless, they're either going to be imposed upon you, or you can use them voluntarily to help you strategically compete. And regardless of that, boards and leadership teams that are proactive about ESG goal setting, they just send the right signal to investors, to regulators, to their own people, right? Increasingly, people want to work for organizations that have a vibrant ESG, diversity, sustainability, and social practice, right? And it's critical to get started now because, of course, there are always policies being discussed at a government level. There are always initiatives being discussed at a corporate or organizational level. So the time is now to incorporate the ESG lens into your goals and goal setting. All right, so the third most important aspect, or the third most important parameter of a mature practice, is the frameworks, right? So there are various frameworks for operationalizing ESG goals. I've made mention of Malaysia's ESG framework. There's the GRI, the SASB, the TCFD, the CDP, the CDSB. There are acronyms everywhere, frameworks everywhere. Some of those frameworks focus on environmental impact. Some focus on social progress, like fair labor, equality, diversity, etc. And others just simply focus on good governance. At the end of the day, frameworks and reporting obligations are well advanced, as I've said, in some countries like the US. And in fact, the EU is adopting a comprehensive package of sustainable finance measures with rules and proposals encompassing ESG reporting requirements with the intention of making the entire continent of Europe climate neutral by 2050. That's only 27 years away, and to move an entire continent to climate neutrality is requiring very vigorous policy setting and driving. So it is happening. These metrics, whilst they're not yet fully tied to regulations because it's solidifying, they will be, because there is a clear statement from various parts of the world around compliance with climate and sustainability type objectives. So what that means is that organizations are increasingly being encouraged to lead in terms of voluntarily disclosing the positive impact of their operations. So until this guidance at a regulatory level is finalized and probably imminent in the Malaysian sense, until it's finalized and communicated to the various regions, organizations should borrow from the appropriate parts of the frameworks to align with your ESG goals within your particular operation. Right. So they're those three of the 6 parameters are the foundation. So let's expand on that. In your organization, and if it's like many today, you probably already have some foundational aspects of ESG practice. You've probably got some leadership happening. You've probably got some ESG goals, and you probably have been referring to or even adopting practices against some ESG framework or standard. The interesting part is that our research with OKEG showed that 8 out of 10 respondents have a plan, an existing plan, or indeed intend to have a formal documented ESG program. So that's 80%. Almost half said they had performance indicators already for ESG. More than half already had a specific budget for ESG initiatives. And nearly half have already conducted ESG assessments of their operations, in the last 12 months. So there are probably already foundational aspects occurring in your organization, and which means you've got a good starting place to accelerate towards a mature practice. So let's now move on to the final three parameters that talk to what powers a really mature, dynamic, vibrant, strategic ESG practice. And that old favorite is it starts with data. Now, the ESG data that you collect will ultimately power your organization's tracking, reporting, and collaboration, right? So it's vital for you to identify the right mix of both internal and external data sources. To assess your ESG data needs, we would suggest that you start, of course, with your ESG goals. It all starts with the goals that you've laid out for the organization, as well as the frameworks you've selected. And the combination of those two will give you an idea as to what kind of data you need to be gathering. And as you identify that data, you need to take the time to think about where it will be sourced and how vibrant it is, regardless of whether it's internal or external. Robust external data sets, you can actually get them from proxy advisory or consulting firms. And you can even get certain data sources from Diligent because we specialize in governance data and peer group modeling and the like. Now, given the evolving nature of ESG regulations and in this rapidly changing world, you need to make sure that you have a solution that allows you to keep that data relevant and timely. You've got to manage the data. It's critical. Ideally, with your data sets, whether it's internal or external, they should be updated in real time. That's the ideal state, but certainly as often as is possible for the particular data set. Relying on old data, of course, not only limits your performance, it can in fact impede your ability to report competitively. But it serves as a warning also to investors and stakeholders that you're not really taking ESG seriously because you're behind what the data actually is saying today. So data is critical. Now, you've got the three foundational aspects, you've got the data, now you've got to really use it, right? As opposed to management of data, you've now got to use the data to drive your ESG practice. So what we are seeing is that really to support a mature ESG program, an organization needs a dedicated ESG technology, right? And it has to be flexible. It's got to be integrated and comprehensive. It can't be a point solution. And I'll talk about point solutions a little later. According to the research that this white paper is based on, 6 out of 10 respondents said that they don't use any software that supports their ESG data collection and management. But they want to look into it because if they're finding it very difficult to generate the insights that the raw data is providing. Right? It's hidden in the data, but they don't have a tool, a technology to actually surface the insights that the data represents. So obviously technology, like in simple business intelligence type principles, can aid ESG processes in a number of ways, especially considering complexity and variability of tracking, monitoring, reporting, and compliance. It can help you with your tracking against standards and frameworks. It can automatically update your compliance dashboards for your senior executive and board. It can automatically accommodate changes in regulations and or standards as they come out. And importantly, it should be a technology that allows you to integrate into other technologies. Point integrations become problematic from a management point of view. Now, with climate accelerating as a top priority, an ESG-based technology system will allow you to operationalize areas of rising risk management within the context of terms that you've probably already heard or are already, in fact, operationalizing yourselves. Scope 1, 2, and 3 reporting, corporate social responsibility practices, supply chain management, especially upstream third-party risk management type lenses upon the business. So selecting the right technology to manage the data sources, both internal and external, is critical to help you monitor performance, compare how your improving performance is relating to your competitive environment. So it may very well be that your performance individually as an organization is improving month on month, year on year. But how is that rate of improvement comparing to your competitors? Are they improving more rapidly? So therefore, you may think you're saying to your board of directors that, yeah, everything's good, we're improving, but you may be improving slower than the market, than the industry in which you operate. So that is an important aspect of the technology and the data that you need to be sourcing, is to understand how you truly compare to your environment. So comparison to environment, comparison to competitors, how you're going yourself internally, that starts to come down to reporting for both compliance purposes and internal practice driving. So we'll move on to that as the next parameter. I mean, in many respects, reporting ESG action is just as important as the ESG action itself, right? Your reporting mechanism should be a seamless extension of your ESG strategy. When telling your particular organizational ESG story, it's important to remember that no organization needs to start from the beginning. I made mention before that you've probably got the workings of a foundational practice already. It's a broad umbrella, ESG. You can take advantage of looking what you're already doing, right? So nearly every organization, maybe every organization, has existing programs or efforts that are looking to support diversity or recycling, waste reduction, community engagement, supporting charities. There's already something going on in almost every organization around ESG, environment, social governance. So, however, but as regulations continue to evolve, you need to make sure that your ESG reporting capability is continuing to meet expectations. So as the environment changes, your reporting needs to be able to take that into account. And it's not only what you have to report, but it's the deadlines and the commitments. What we're seeing emerging around the world is not only the expectation of an ESG practice, but an expectation of real-time practice. And that is across all facets of society. Here in Australia, for instance, the Australian Taxation Office is looking at systems for reporting income in real time, so that as soon as someone is paid their wages, that payment is immediately available to the ATO, to the Australian Taxation Office. So we're moving from not only compliance with requirement, but real-time compliance with requirement. So reporting elegance is important in that context. And of course, it's also important when if you need to do a reverse, like an audit of past activity, the reporting solution needs to be able to support you in that goal. So they're the six aspects of a mature practice. So what does that mean then next? What are the next steps for a mature practice? So, as I said, whilst many organizations have the first three, leadership, commitment, goals, and some awareness of frameworks and or standards in place or underway, they need to also be aware of the data reporting, the technology challenges, and I've been through that as well. A good, mature, vibrant, agile ESG practice has all of those components in place in a seamless way, so that what ends up happening is that the ESG practice becomes embedded in the operations, all right, of what people are doing and the organization, what the colleagues are doing and how they're doing it. So once it becomes mature and embedded across those 6 parameters, there's really only then sequentially 4 things that you need to do to keep that practice current and live in real time to drive your business. And that is make sure it's acquiring the latest and correct information, review that data and have a process for doing so, map that new data against your goals, and to make sure that you're undertaking the next steps to ensure that your disclosures are clear, current, agile in your reporting. Now, the reality is that in all jurisdictions, time's running out for any organization that does not have either an established or a solid plan for an imminent, mature ESG practice. The regulations are coming. Climate change is accelerating in the media. Shareholder action is occurring. Investor decisions around where they will invest their money are occurring within the ESG lens. There is no time to be not adopting this practice. So that is essentially the completion of my presentation, but I wanted to just take you through just very quickly how this fits, this ESG topic fits within the broader context of risky business within the turnkey terminology, right? So there's a big shift going on around the world, and you as practitioners, you're right at the center of it, right? The scope of organizational risk is constantly expanding with evolving rules, regulations, evolving threats, reshaping the governance landscape. Board member responsibilities are evolving to meet an increasingly complex and regulated landscape, and the directors and CXOs themselves are facing increasing pressure to master non-traditional topics like ESG, sustainability, cybersecurity, diversity, equity, inclusion, etc. So today's leaders and directors face a shared challenge: more technology, more data, more choices to make, more noise, more doubt, and more time pressure to make contextually correct decisions. The interesting thing is that, and I made mention before of fragmented individual systems in the GRC space, Forrester research has shown that the average organization has a fragmented technology environment for managing GRC of 6 separate point applications. That becomes very difficult to manage and becomes very difficult to provide to the board or to the senior leadership a singular picture of the GRC, audit, risk, compliance, ESG landscape for their organization. So in response to that research and our own research from the Diligent Institute, in the last few years, we've acquired 25 companies or tools and have created essentially the Diligent One platform, of which the ESG component is but one pillar. And you can see that on screen. It's at the 4 o'clock position there. ESG is one component. The goal here is that we are empowering each individual executive, whether it be the chief risk officer, the chief audit executive, the chief sustainability officer, the chief compliance officer, the company secretary, ethics and compliance. We're empowering those departments and roles to run their practices on our applications, but to also surface relevant key indicators, key trends, key information from those applications within the board portal management software that boards use. I mean, we have massive market share around the world for board management software. In Australia, 85% of the ASX 200 organizations use the Diligent board management software. In Singapore, I think from memory, it's 77%. Right, so surfacing those practices, key information into the Diligent One platform, into the board portal via the management platform, Diligent One platform, is where we are going, and ESG is a part of that. And with that, I thank you for listening to me around ESG and how it fits into the broader GRC landscape. And I will pass back to Nick in case there are any questions.
Great, thank you, Simon, for sharing today on how best to prepare for the future ESG disclosure requirements. I didn't realize the importance and really the impact ESG could have on your business. I imagine that applies not just for your SMEs, but even for your larger organizations. I did, while you were sort of presenting, I did have a question I'd like to ask. One was around what are the challenges organizations are facing when it comes to achieving a meaningful action on ESG?
Yeah, that's actually a very common question. It's and I think it's partly borne out by the problem that there are so many frameworks and standards, and organizations are increasingly global in their operations. It becomes difficult for them to understand where to start. So if I could break it down into sort of 2 areas, internal and external challenges. The most common internal challenge we hear about, as I said in the presentation, is data management. So getting the right data, and actually being able to manage it, keep it current, keep it accurate. It's always interesting to see that larger organizations typically have reasonably good sustainability reporting, but even they will make comment to us that the management of that is quite difficult for them. So they've set a high bar by having a high quality sustainability report, but that requires a very intensive level of investment in managing the data. And, it could be 3 to 6 months worth of work for a large organization to put their very, very comprehensive and elegant sustainability report together. But you don't need to be at that level, right? You need to set an appropriate level for yourself around what is internally sustainable. And I've made mention in the presentation of the 6 parameters and where you can start and building on things that are probably already happening in the organization. Externally, what we commonly get asked is what is the balance between using ESG to strategically compete versus comply? Now, at the end of the day, the board of directors or the ownership of the business, they only have 2 responsibilities, right? Is to comply with law and to ensure that strategically they're driving the organization to greater and greater success. It really comes down to those 2 things. Typically where we see if we just take compliance as mandatory and not even think about it, if we look at strategically competing with your alternative suppliers in your particular area, using your ESG bona fides to position yourself as a high quality, socially responsible organization supplier, it helps you compete with those entities that don't, right? So increasingly, as products become commoditized, as services become commoditized, then it is the ability to compete on the softer factors of equity, diversity, inclusion, environment, social, etc., in order for your prospective customer to say to you, hey, your offering is fundamentally the same, your pricing is fundamentally the same, but I like your values, I like where you're going, I like what your organization stands for and what it's trying to be as part of our society. So that is a critical one. And then the final external factor, and I made mention of it as well, is shareholder activism. If you're a publicly organized business, even if you're private and you have a particularly robust investor who is ESG centric, you're going to experience pressure there, right? So shareholder activism and litigation threats, they're the external components to driving you to establish your practice.
Great. No, that definitely answers my question around that. There is some social responsibility that creeps into that as well, really from our private lives into the corporate stage. So it's quite interesting how they sort of slowly, merge in. But we all want to obviously work for a company that is quite, responsible when it comes to the environment and the other factors. That's great. Thanks for that, Simon. Just going to go to the floor to see if there's any other questions. We got time for 1 or 2 questions. I'll just see what's been posted. There is a question around, if we can just beam that up. Let's put that up on the screen. It's around what are the key considerations when we are looking for an ESG landscape. So we are looking for one. What is it, Simon, that we should be focused on?
In looking for an ESG technology solution to power the practice? Yep. Okay. Yep. It starts with, as I said during the presentation, really, it starts with what are your organizational goals? What are the frameworks and standards that are relevant to you in your particular jurisdiction and the jurisdictions in which you sell to? So if you're selling outside of your country, you need to be aware of the standards and the frameworks that are relevant there. And you genuinely need to look at, okay, within the context of our goals and where we are trying to generate customers and business, what are the guiding principles in the frameworks and the standards in those areas? Once you have a clear picture of that nexus point, you then can build a set of requirements that says, I need a technology solution that can do these things, right? Importantly, you also need to be looking at the regulatory statements, so the statements from government about where they're going. because the last thing you want to do is to acquire a point solution that is relevant to you today, but really is not expandable or integratable to other applications. Doesn't have a global lens in the way that it's presented to you. So because you'll just end up with another point solution to manage, right, that is going to start to fall behind. So match your goals to the frameworks and the standards that of the jurisdictions in which you are building your business, and from that you will see a clear set of requirements that then will determine what tool, what technology platform, what data sources you need to secure. Whether it's Diligent or anyone else, that's the way to do it. What are the clear requirements of strategy and framework?
Great. Okay. Thank you. Thank you for answering that question from the audience. So I suppose that brings us to the end. I would like to thank once again Simon Bergelin from Diligent for presenting, and everyone who's joined us for this session of Risky Business 2023. As Simon said earlier, we'll be sending out the white paper from this session. And if you do have any questions, then obviously drop us an email as well. You will probably see that email address in the registration form. So thank you everyone so much, and have a good afternoon.
Thank you.
Thank you, Simon. Thank you.